All right, all right, all right. How are you guys doing?
Good.
All good.
Awesome,
Thank you.
awesome. All right. Today we're gonna. Here today at the Alibaba Cloud Day. We heard a lot about the Web3 space, DeFi, Metaverse, you name it. But I want to kind of take a few steps back and let's go back to the roots. Let's talk about crypto payments. Let's talk about crypto exchanges. So we all have a history in the crypto exchange space, crypto payments. So before we dive in, we're not going to go too detailed. We're going to educate you guys about the crypto exchange space, crypto payments. So before I head forward, hey guys, take the lead. Basab, please introduce yourself.
Thank you. It's a pleasure to be here with an Alibaba Cloud in an event. So good to see a lot of people are still there and listening to us, this interesting session. So myself, Basab Banerjee, I'm the CIO of the Matrix and Exchange Limited. So this is the first regulated crypto asset exchange, went live almost now 2 years under the regulatory framework of Abu Dhabi Global Financial Market and FSRA. So yes, we are the marketplace for crypto asset under regulatory framework. Thank you.
Great.
Awesome. Fakhul, please.
Hi, everyone. Thanks for having me. I'm Fakhul Miah, the growth lead for Elastos. So Elastos very much cares about people's digital destiny as we are moving more and more into the online world where we're living, socializing, and working online. Understanding and being able to own and control your identity is a super important thing. So what Elastos is it's a open source Web3 project that has its own native chain, which is merge mined with Bitcoin. So you get the benefit of the hash rate of Bitcoin. And then it has a sidechain architecture, so you can spin up private or public chains. So for example, we have a thriving EVM chain. And then to support all of that and really to focus on the identity piece, we have a dedicated blockchain just for identity. And it's a universal, decentralized identity for anyone to use across any chain, either in Web 2 or Web 3. And then it's accompanied by a number of different components, such as decentralized storage, decentralized peer-to-peer messaging, basically everything you'd need to create a true Web 3 experience.
Awesome. Hey, Zach, please introduce yourself.
Yeah. Hi, everyone. This is Zach from FormalPay. And actually, we were based in Singapore. And right now, trying to actually expand to the MENA region. So basically, FormalPay, we were the first so-called digital payment token license actually issued by the Central Bank of Singapore, also known as the so-called the crypto license. And for last actually almost 9 years right now, so what actually FormalPay we are trying to do is really bridge the different actually technology into the financial sector. So the reason why actually we are trying to bridge is really the Web3 actually to the Web 2. So just now actually we were actually discussing really what's really the use case of those like a Web3 technology. Can you really use actually your Bitcoin to buy a single cup of coffee of this one? Yeah, I bought my first coffee like 6 years ago actually in Singapore. So that was really something we want to see, that technology can be also implemented in our daily use case, can really see the mass adoptions. That's something why actually we think that we have enough experience in Singapore and here in the MENA region, especially in UAE here, we think that we can also bridge the gap between the Web 2 and Web 3.
Hey, awesome, Zach. Hey, and thank you so much for the intro. But just a quick question.
Yeah, sure.
Could you tell us the meaning of the word FOMO? Hey,
Sure. So we started this company in 2014. So that was 9 years ago. It was kind of a coincidence because FOMO is a very, very Web3 native word. But at that time, the Web3 was definitely not really as hot as that. And for FOMO at that time, actually, just to give you the full name, actually it means fear of missing out. That's really kind of the feeling that the client actually we were serving, like traditional banks, Visa, MasterCard, how they feel about all the digital payment at that time. But right now, they are really starting to FOMO again about the digital currency. So yeah, even there will be like Web 4 or even Web 5 in future. So that's how something actually really people really fear about the FOMO. But our slogan is really, with FOMO, we try to really get people out from the FOMO, but turning the fear of missing out into the so-called the first one to move out.
Oh, nice. That's good. No, because in the Web3 space, we have our own language. So hopefully in due time, the rest of the world will catch up and be part of our blossoming culture. So Basab, you work with Matrix. You guys are a centralized exchange. Would that be correct to say?
Absolutely. Yep.
All right. Just for the folks out here, could you just tell us the difference between what's a centralized exchange and a decentralized exchange?
Yeah, thank you for asking these questions. And I mean, in the today's world, is a very, very relevant questions, to be very honest. Like recently, we have seen that some of the largest exchange in the world been bust out. I mean, and that creates a lot of confusion to the investors on the trust of an exchange. So therefore, this centralized exchange is coming in where your hard-earned money, whether it's virtual money, and then you convert it into you have the fiat and then convert it to the virtual currencies. So how do you ensure these are safe and secured, right? And so that's why this centralized exchange is coming, where we are working under a complete regulatory framework. Now, what does it mean, a regulatory framework? It means that when an exchange is forming, it has a complete governing structure, so that the fund that an end user is parking to an exchange, like exchange has two parts. One is that the matching, where buyer and seller come together. We create a platform where they can get a best execution price, so that whatever I'm buying it, I should get the right value for that. So we are giving a platform to the best execution of your transaction. But the second part is the clearing and settlement. What does it mean, clearing settlement? That if I'm buying something, it means that I'm paying something, and then I should get the right product which I am bought for. So it has to be quantity, quality, or all the nomenclature which I'm supposed to get it. Like in the normal traditional, market, like crypto market, where I'm expecting I'm going to buy one Bitcoin. So I'm paying, let's say current value is something around $20,000. So I'm paying $22,000 to get a Bitcoin. So the first question is coming, what the authenticity guarantee? I'll get the best price. So the exchange is coming, giving you the best execution venue, so that you should get the best price. Number two, I pay the $22,000 in advance, then I should get this one Bitcoin to my wallet, right? If I don't get, what happened? Where should I go? So the regulatory framework is coming. It ensures that your money is safe, the transaction has been executed at the right price, and the virtual asset, what you purchased, should come to your wallet at the same time. Now, the question, the biggest question is coming, what happened if the exchange burst out? And that's the biggest question nowadays. Everybody's mind is coming who are investing in a crypto world, that what the guarantee the exchange is going to survive. And here the regulator comes a big way, because they endorse that the exchange which is offering the services is completely secured, especially where the client fund, which is the virtual asset or fiat, is concerned. So all the custodian services are completely governed and monitored by the regulator. They give the endorsement and assurance that customers are completely protected by having the similar control framework put forward by the exchange. And that's why the centralized exchange is coming a bigger age compared to the decentralized and the exchange. Yes, there is certain drawback, I would say, like the decentralized exchange, predominantly the KYC process is not that important, not that strong. Maybe that is one of the key factor of the blockchain, especially when you're talking about the marketplace. But having said that, in a centralized exchange, there is a challenge for the KYC process because it is a bit of stronger, but it gives the trust. So in summary, the centralized give you the most trust, secured environment for execution, but a decentralized, this might be easy. It might be easy to enter on exit, but it is pretty risky. I hope I answered your question.
No, I think you covered both the centralized exchange and the decentralized exchange. No, thank you for that. But I'm kind of want to go one level deeper with regards to centralized exchanges, and especially in the Web3 space is all about security. So you talked about the user funds, but also another important element we need to talk about is data, information. And as you know, we're entering a space where data is the new oil.
Absolutely.
To phrase it that way. So in your point of view, how does an exchange ensure the security of the funds, but also personal data, which is, I personally think some may argue that it's much more valuable.
Yep.
You know, so please take it away.
No, exactly. I mean, that's a very important point that you are coming in. And so securing the personal data is very important for any exchange. So therefore, we talk about, GDPR compliance, and that's where the regulator is coming in. And it ensures that the exchanges are follow the global practices and standard. For example, the GDPR, right? So the anonymous data or users should not be identified with their personal information. Users should be identified with a certain identity of which can be exposed to the external world, but without disclosing this personal information which user belongs to. And well, the blockchain as other way, gives us an ability, the transparency, right? It means that the wallet address that someone is having, it is transparent, and it's transparent about what the holding is there, but it doesn't disclose the identity of the person, right? So that way, it is very much transparent blockchain, and it talks about any transaction that you are doing it because it is writing to the chain, and the same thing, it is available on the display on the wallet, which you can go and verify what the holding of my assets. Now, one way we are distinguishing ourselves, as we are talking about the security, which is the big threat for any exchange, not only for exchange, whoever in the custodian and space. Right. So what Matrix has done is that we create the marketplace for the best executions, but we do not hold the fund on our own chain. So we have outsourced this particular custodian services to well-recognized service provider like third-party environment, where they are, in our case, it is currently BitGo. So they're managing the the blockchain part where the wallet are being stored. So in coming to your question, that KYC process is very strong. We gather the informations, but we, as a regulatory framework, we follow the international principle to ensure the data are safely stored and not being disclosed to the third party, unless and until it is required as a regulator point of view. Otherwise, the customer identification is an ID that will only be published. So we'll ensure the security from that, and the compliance is very important for us.
Please go
I think for the crypto degens out there, I should play devil's advocate. I think absolutely centralized exchanges are needed, and often, that's where most of the liquidity is, right? So it's very easy to interact with. But if you compare it to a decentralized exchange, the fundamental difference is it's a centralized entity, right? What's the saying? Not your keys, not your cheese, right? And that's because ultimately you're relying on the centralized exchange to manage your assets. You're trusting them. And that's where being regulated hugely helps, right? You've got things like KYC, so you know who the founders are, the people behind the centralized exchange. Also, things like two-factor authentication, right? So, when it comes to DEXs, if you forget the password, the 12 seed phrases for your wallet, screwed. But there's nothing you can do with a centralized exchange. There is a way to recover it, and that's because they're holding it centrally. And they do put in mitigations to secure your assets. The cold storage, they do security audits, etc., etc., etc. But if and I think there will always be a place for centralized exchanges and decentralized exchanges. The difference really is me as a user. Do I trust the entity I'm dealing with? FTX is a classic example. No, we shouldn't have. Everyone thought they were, but they won't. With a decentralized exchange, you have the power. But equally, you have the responsibility, right? Sure. If you do something wrong, it's on you.
Okay, so there's a big cultural difference. But hey, Zach, do you have any points to share?
Oh, sure. Yeah. Happy to share actually a little bit. I think, just now actually the two gentlemen actually shared actually quite deep into the data side. So maybe I will actually just build on the point actually about really the security side a little bit also, especially about the compliance. Because the key difference right now, all the regulators globally couldn't really regulate the decentralized exchange. It's really where you can find the identity of the person and where is really the source of a fund. That's something really the regulator couldn't really get an answer from. And also that's why actually the global, all the central banks, they really couldn't really regulate them. But back to the example of centralized exchange. So just now you mentioned also about the FTX example. So FTX, they play a very smart trick. So the FTX .us is regulated. So everything, actually all the data, all the consumer, all those information, actually yes, central bank actually did actually have a copy. But how about actually the ftx.com? So actually they are the one actually not really regulated, and they are trying to really position themselves as kind of like a regulated like a player, but under the different like vehicle, different entity. And for formal pay, we happen to work with actually 5 out of the top 10 crypto exchange. So one of the challenges for us is also how we make sure that the fiat currency, because eventually we need to actually work with the bank, they are comfortable with the standard, no matter it's decentralized exchange or centralized exchange, what they are having right now. So this is still actually the gap actually since like a few years back, when actually Bitcoin actually was really like such like a natural actually instrument for some of the illegal activities. And right now you are trying to really put another additional layer on top of this like decentralized layer, and how to really find the balance between the security and the convenience. So I think that's something definitely actually always actually debatable. And a lot of Web3 players, they don't really care about the compliance. They don't care about actually the traditional banks. So that's why actually the innovation is really like very fast. And I think a lot of DeFi, those decentralized exchanges, they are really doing those like algorithm trading, all those ones. Yeah, they are really like far away. But still, a lot of centralized exchange right now still suffering about the license, getting the regulation, getting the compliance actually approved from the central bank. That's where I think definitely actually this is something it's still going on, and but we see that something really very positive, especially in UAE here. We see regulators, they are also competing with each other, and they are also trying to regulate not only the centralized exchange, but also decentralized exchange. That's something I think very promising as well.
Yeah, I mean, just to add on that, you're actually rightly mentioned that I think we are very fortunate because in the UAE actually supporting a big way, from the since many years. I mean, I'm not talking about few years, but last 6, 7 years, we have seen that, the UAE as a pro supporting this technology. We all agree and understand the power of digital DLP technology and the blockchain as an underlying protocol for various use cases. So the country is supporting that a big way. And as a result, they understand that the alternative currency, like the world need to have an alternative currency. We cannot have only a specific few currency which is dominating in the world. So we need to have an alternative currency. But is that currency is regulated? That the question is coming. So they're trying to put a framework to ensure that whatever we are doing, the transactions using the digital asset, or whether it is a marketplace or whether using an asset for transactional point of view, there is a framework. And they are taking one big league step ahead here compared to the many other countries, and create a proper framework protecting the investors or protecting the users, basically, right? And that's, I think we are very fortunate that they're coming out. Now we have ADGM in Abu Dhabi, with Avara here in Dubai. So they are coming out. Yes, can you say that this is the ultimate? Possibly no, because there is no case studies or prior study. We may have to evolve a little bit. But this is still there is a lot of regulatory framework which assuring the customer protection. Right.
I think just to end, a good way to kind of mitigate the risk is use a centralized exchange, because it's got generally the best fees, the best liquidity, etc.
Right. Yeah.
But once you're done, just hold your assets on a self-custodial wallet, and you get the best of both worlds.
Yes, I mean, see, the assuring the as you mentioned that when the regulator coming into the place, they ensure that the controls framework in there. Like for example, for our case also the same thing, we do not keep our virtual asset in a hot wallet or warm wallet. It is always moved to the cold wallet, right? Because this is the framework.
Oh, you're talking about your third party.
Absolutely.
All right. Okay. Like BitGo, right? They use the advanced cold storage system.
Absolutely. Okay. So this is the regulatory framework definitely come in, and they will tell you that these are the steps as a regulated exchange you need to do. Yep. Like anti-money laundering, there are certain protocols that need to follow. The KYC process need to be ensured that the banking is appropriately there. Where the source of fund we should know. Yes, this is a bit of challenging compared to the decentralized exchange, but that gives the ability for a genuine investors who want to use this platform as an investment point of view. Let's look into the crypto X market. We know the world is going for a tough time now, right?
Yeah.
But look at the Bitcoin. Yes, it has been fallen significantly, but still it is trading at the value of $22,000, $23,000, right? Ethereum, yes, it's fallen maybe $4,500, $6,000. It's still trading in 1,500, 1,600 level. So it means that there is a need of those currencies.
Sure.
It's not a zero value. The society need that. There are community need that. But the challenge is coming that how can I have a proper framework that my assets are safe? Like the case of FTX, unfortunately, people trust it, but the company bust, and then nobody knows where the fund and virtual asset are lying there, right? And not many people are guided, are honored, or spoke about that you should take out your virtual asset, put it in your private wallet. People are not aware of that. So therefore, the regulatory framework is coming, giving this the investors all those information and knowledge. They should take the appropriate action.
Yeah, and I think regulation will help. As more and more regulation enters and insurance products, certain exchanges offer insurance, that will help. If I think of traditional fiat banking in the UK, even if my bank goes under, the government will cover a certain amount. I think it's 80,000, whatever.
I know in the United States, the FDIC is like
exactly the FDIC.
Okay, there's
and it's all about don't put all your eggs in one basket. Diversify your portfolio where you hold it. But I think we're never going to end up in a world where there's just centralized exchanges or just decentralized exchanges. I think there's a need for both, and it's just what suits the user.
Yeah, sure. I totally agree with you. Yeah. Speaking about centralized exchanges, I know you brought up Bitcoin and Ethereum, and it still maintains value because there is economic use in the marketplace. So I want to get into the arena of crypto payments. So I'll start with Fakhul and then definitely Zach. Talking about crypto payments, you got crypto payments, you got traditional payments. Could we talk about the advantages of crypto payments, and also let's also get into the disadvantage of crypto payments, comparing crypto payments and traditional payments. Would you like to go with that?
Yeah, sure. So basically, actually, when we started the business, it's really like a connect to formal, connect to all. So we have actually a few instruments other than actually the digital currency. We have the digital payment, which is a digital wallet from your mobile phone, or can be actually another another actually digital device, and also the digital banking. And then recently only actually come to the digital currency. And the digital currency payment, which is known as a really good crypto payment, did have its own advantage and disadvantage. So back in 2017, that was really the first actually so-called crypto coffee opened actually in Singapore, actually just downstairs of my office. I went to actually buy a coffee. I was so excited. Finally, I can really use I used my Ether wallet last time actually to buy this coffee. The coffee, it's just $5. But the transaction fees, make a guess how much it costs. So the gas fee was quite actually significant. So it cost me actually $30. So I still have—
Just to buy a cup of $5 coffee. Oh, wow, okay.
I still have the receipt. So basically that coffee actually is one of the most expensive coffee that I paid. Is $35, including the transaction fees. So that was the nature, because back at that time, actually the Ether, all those crypto actually, this is kind of the major coins. They were not designed for really the daily use. So really that was really the ETH actually 1.0 actually. They only actually upgraded to 2.0 recently and reduced all those fee, all those issue. But this was really the nature. And at that time, we realized crypto is actually still in such a kind of experiment stage. Definitely, actually, innovation always comes from actually the minority. So there will be some people actually try and feel what's really the advantage and what's the disadvantage. And now here we come to actually the advantage side. So there's actually another merchant that happened to be our customer in Singapore, which is Lamborghini. So Lamborghini, I know that in UAE here it's not that affordable, but it's much cheaper here. At least it's 300,000 or half million. But in Singapore, it's very easily 1 million or 2 million. And actually for the merchant, actually the owner, actually, they actually our clients. Then they told us, if you are going to pay for the Visa MasterCard for the Lamborghini, Visa, they charge in terms of percentage, minimum 1% or 2%.
Absolutely.
Out of a Lamborghini, 1 million or 2 million. Wow. So imagine what's really the transaction like that. But if the client is paying in the digital currency, Some of the transaction fee is still $30. It's similar to the coffee, but right now, compared to a Lamborghini, that's actually much, much more like insignificant. So that's where actually right now, a lot of our clients, even before actually formal, we have our regulated solution. The owner, they use their own personal wallet to actually accept the crypto payment from the customer before and do the like OTC, all those channels, then convert back to the fiat. But this one also creates another issue, which is accounting and finance issue actually as a business owner. So that's why actually formal, we also spend almost 2 years time really work with the regulator, working with the banks to make sure that actually all those crypto instrument, we are able to actually fulfill the bank standard, do the KYC, KYT, and actually make sure that everything is legit before the client actually can use this instrument. So that's why right now, if you in Singapore, yeah, Lamborghini is one of the example, but also some other like luxury goods company, you will see more and more of them start to actually accept the crypto as a payment. So that's where actually we say that the disadvantage and the advantage actually start to really influence more and more market.
Interesting.
Exactly.
Sure.
And just to add, sorry.
Oh, go ahead. That's
Yeah.
all right.
So just to add on that, I mean, for your information, even Dubai also, you can buy a coffee by paying crypto.
Oh, great.
Yeah. In fact, yeah, one of my ex-colleague and friend, they had a coffee shop and that start accepting, the crypto as a token of buy a coffee as well through the wallet service. So I think absolutely. I mean, we need a more service provider like him should come in and fill the gap. Let's look at that. We are talking about Web3 and look at the current the projections of Web3 progress. Currently, the market value is something around $2.8 billion, and by 2033, it is expected that its value will go up over $100 billion, right? With the CAGR is more than 44%. So it means what? It means that there is a big appetite. 44% annual CAGR is not a small thing, right? And that is the all experts are predicting on that direction. So definitely we need to have ecosystem to run this the financial system, and where the payment through the crypto payment yes, there might be a question that what instrument you should pay. Maybe a stable coin would be taken care of more rather than any other virtual currency. But there is a need, and we definitely need to have a ecosystem provider, more ecosystem provider on that, but within the framework of regulator.
Yeah.
What I mean to say that, whenever you talk about financial stuff, I think has to be somewhere regulated.
Interesting. Okay.
And I think it's, it's not just buying Lamborghinis and whatnot. It's you've also got people that tend to work overseas,
right, remittances,
workers, etc. I'll give you a great example. A few years back, my father passed away, and we needed to do certain funeral rites back home, which is in Bangladesh, and we had a hard time sending money because we needed to do it immediately.
Right.
And the beauty of crypto is, you can settle a transaction within seconds.
Absolutely.
True.
So, for me, it was I couldn't move money for several days because the weekend was coming. I needed to open a bank account. I needed KYC.
Yeah.
But crypto, literally send it in a few minutes, done. So I think
amazing. Wow.
The ability to move cross-border and almost instant settlement, huge game changer. Yeah. But equally, there are disadvantages. Again, if you get it wrong, you cannot recover your funds unless you use a centralized entity. And two, depending on the token you're using, if it's a stable coin, fine. But if it's a different token, price volatility is a huge issue.
Exactly.
Something you send right now could be worth a lot less because if the price just fluctuates so much. So again, pros and cons, but ultimately I think the pros will outweigh it. And again, as more regulation comes in, more adoption comes in, a lot of these risks can be mitigated away.
Okay, interesting you guys brought up...
Can I just add one more point?
Yeah, sure, go ahead, Zach.
Yeah, actually, since you mentioned about really some of the currency is, people think that actually cryptocurrency is volatile. But actually, because actually your benchmark is the currency like US dollar or like a US, like a AED or those one. But I was in Argentina last year, October, just after the DEFCON. So MakerDAO was very popular there because of the Argentina peso itself has been depreciating 30% for 30 years. So it was 1-to-1 with US dollar like 30 years ago, but nowadays actually it's 1-to-148. And there are two rates. One is actually dollar rate, it's 1-to-148 at that time. And I actually got my crypto exchange like a friend helped me to exchange get the dollar blue rate. One US dollar, I got a 280. It's like 2x of the rate. So if you compare, you are complaining that actually the crypto currency is not really like stable, but there is some of other countries they even have actually even worse situation in their country, and actually cryptocurrency. It's actually disadvantage in this country. It's actually becoming the advantage in some other countries. So really think about your perspective and the positioning.
Yeah, sure. Because I have some friends like from Venezuela, Mexico, even like Latin America. I mean, they depended on crypto payments to, make things happen. Kind of like in the example that you gave. I think that's interesting.
Yep.
But I just want to talk about stable coins. And I want to talk to you, Fakhul, because earlier we talked about stable coins and, this incoming stablecoin war is taking place. So what do you think about the stablecoin's role in the new era we're entering in? What's your thoughts on that?
It's an interesting one because I think right now there's such a huge reliance on stablecoin, and which kind of goes against the original ethos of digital currencies. The whole point was you move away from fiat, you replace it with a decentralized token. But because of the lack of liquidity, regulation, certain on and off ramps, you need to rely on stable coins to make up a lot of trading pairs. And you may not realize, but the most commonly traded asset is stable coins by far. So then the question becomes, okay, fine, it's the lesser of two evils, let's use stable coins for now. Then you need to start thinking about, okay, what is the stable coin that I'm going to use? USDT, by far the largest right now. But equally, there's certain questions around the reserve practices. Is it 100% backed? Because theoretically, a stable coin is meant to be the representation of a token that is 100% backed by fiat. So USDT is supposed to be backed by $1. For every one USDT that is minted, there is $1 in a bank account somewhere. Now, that's not true. Even with USDC, which is supposed to be more secure, that's not true. Often or not, what happens is, you might have short-term notes, highly liquid government bonds, etc., that make up that balance sheet. So again, you need to be, wary of it. And again, I think with stable coins, they're needed right now, and they will be needed for a very long time to come until, at the government level, they start adopting crypto tokens, as for monetary policy, etc. Stable coins are here to stay. But again, make sure you do your research, make sure you understand the ones you're using, diversify where you can. But yeah, it's needed.
Exactly. Just to take forward from you, what you say exactly is that it's I think that responsibility, not the governance, responsibility to us as well, as an investor or as a buyer.
All right.
The problem here is that we become too greedy. And we bought the news, just the information. Somebody saying, oh, this is a good project, let's jump into. But we never go in deep, right, to understand what this project all about. It's like something is moving, let's jump into that. What engine is there, let us nobody care. Right.
But greed is good, right? I mean, Gordon Gekko, right? The guy, I forgot from the movie, he said, hey, greed is good. I mean, come on, man.
And then this problem will come. Like one way I would say that, FTX incident is one way good because it is eye-opener.
Gotcha.
The people need to invest some amount of time before investing the hard-earned money. Yeah, we pay sometimes gambling.
Yeah.
Okay, let's put $1,000 if the token go up, it can be $10,000 in 1 year, and so let's bet it. But that's something, is just committing luck. You are just working for it.
That's my investment strategy, man. That's how I'm going to be rich, for the next bull run.
But that is not going to happen every time. There is a probability you will be badly hit.
What's the saying? Dior, not the luxury brand, DYO, do your own research.
Do your own research, yeah.
Don't invest, you should do
Sure, yeah. But hey, Zach, but I mean, I guess you're based in Singapore, right?
Yep.
And covering the Southeast Asia. What's the stablecoin scene over there? Is it very active or?
Yeah, sure. I can also, because I'm an engineer, I always want to actually support this one by the real data and the example. So you look at actually the circulation of all those the payment instrument. So last year was really the first time actually the circulation of stablecoin really surpassed even the Visa MasterCard transaction numbers. So actually Visa MasterCard has been really dominating actually the traditional payment for so long. Right. But right now actually the stablecoin is really replacing it. And one of really the major use case of stablecoin especially in those like currency actually restricted country, they are trying to actually use actually the stablecoin as kind of really the instrument of ready for remittance as well as really the cross-border settlement. So Ripple, yeah, that actually was I think one of the actually the top 4 actually coins in the world. Actually, they are also trying to actually set this one to really replace the traditional like a SWIFT system.
Right.
But they try to actually do this one, but they are, I think, a little bit actually too restricted to the like SEC regulation of this one, so they couldn't really make it. But actually, another partner of us, we happen to be the first partner of USDC. That's actually one of the largest actually stablecoin issuer as well. So they managed to be really the settlement instrument among actually of a lot of different countries. So Southeast Asia is very popular right now using the stablecoin. Even actually, I just still use the LATAM trip. The Brazil, I was really shocked. After actually we closed actually one of the clients there doing the international trade. Right now they are doing around like $3 million US a day for the settlement and using the stablecoin. Yeah,
Wow.
so that's really something we saw that it's really growing a lot in the emerging market.
Interesting you said that, but just to follow up with the stablecoin payments and stuff, because you're on the crypto payment, the processing side, you handle the traditional and crypto. I was kind of curious about the merchant side, like how do you help with merchants integrate crypto payments with traditional payments with FOMO Pay?
Yeah, sure. Yeah, this one goes to the product side because actually we have a different product for the different customer. Our the easiest client is really the merchant because their nature of business is very easy to deal with. Then we also actually serve some of the customer as the so-called financial institution because like the remittance house, they also actually sometimes actually need such an instrument. Then how you actually design the whole system capable to their like KYC, AML policy, all those one. That's another challenge. Then some of really the crypto exchange and even banks, they also want to actually be part of the game. And that actually will bring the difficulty to another level. So that's what actually FOMO actually we are very excited because that's actually some of the problems that no one has solved before. And that's something really keep us also like fear of missing out.
All right. Okay. Interesting. No, but it's interesting you mentioned about also banks also want to get into the crypto payment side. I mean, I was under the assumption that the banks they don't want to touch crypto because it is out of the regulatory side. But it's interesting that they also want to get into it.
Banks want to make money, right? So
Recently, you saw the news. Actually, even the first Abu Dhabi bank, they also announced that they also have the crypto division. Yeah, the news was like out like 2 weeks ago.
Well, just to add on that, on the central bank, if you look into the UAE central bank never says that banks should not go for the crypto.
Really? Okay.
Yeah. So it's not like that they're not saying that you cannot go to the crypto venture.
Gotcha.
It is the internal banking policy which we are. So there are few banks which even Matt is also talking about, few local banks which are offering services. It's expensive, so that's one issue. But the banks also understand that in order to move, now today we are talking about digital banking, right? So no personal to personal. And tomorrow we will see our avatar is coming in. So our friends here is talking about, Web3 technologies. So that we are going to see even the banking sector very soon.
Yes.
Especially the UAE where the technology savvy banks are going to pick up those tools and all to be ahead of the curve. So when you talk about converging in the Web3 technology with the banking sector from the Web 2, conventional Web 2, so you mean what? You are entering into the digital domain.
Right.
One way you're adopting that, okay, customer will be coming as an avatar and I'll opening up my complete bouquet on that. But then I'm talking about I'm not going to take the digital currency, right? So that is not going to happen. So I think this convergence is going to happen. It is only thing is the time matter. And there are certain associated risks because of the high volatility of the certain crypto assets. And so how we can control those in the areas. But stablecoin like something which is, but our friend says that yes, still there is a certain challenges on the assets. Like in UAE, I know there are gold-backed tokens are coming in, right? So where gold are parked to a stable government entities and where their tokenizing is 1:1 and launched. So already those products are available in here. Now they're also coming out of the wallet and all those which I know. So it means that they are understanding, banks are understanding. I think all are taking a careful approach who are going to be. But those guys who are going to be the first will definitely take the advantage.
Yeah.
Gotcha. Interesting. Okay. And it's interesting, you talked about, banks and institutions, I personally believe that, crypto payments is going to grow. So, I personally believe that it's going to grow pretty fast and it's going to get stronger every year. But I'm kind of curious to get your, I'll start with you, Fakhul, like with crypto payments on the rise, what do you think will be the impact on the traditional financial space? What do you see?
So I come from a banking background, and I think back in 2017, I was at Morgan Stanley, we were building out Bitcoin futures offering for our institutional clients. Honestly, when it comes to banks, they'll go where they can make money.
Gotcha.
If you think about a bank at its most fundamental level, they take in users' assets, and then they lend them out. So if a bank can do that with your crypto assets, why not? It helps their bottom line. And if more users are buying crypto, then there's going to be more demand to hold that somewhere if they're not comfortable holding it themselves. Now, at a more macro level, I think there are a lot of hurdles, especially if banks want to participate in the crypto economy. And what do I mean by that is not just storing, but maybe lending or investing, et cetera, et cetera. And for me, the single biggest challenge is for institutions, banks, et cetera, to participate in traditional finance. The vast majority of it is based on is credit-based lending. Right? It's not it's not, you're not over collateralized. And so until we as an industry can offer more products that allow users or institutions to borrow, on a credit basis, then that's kind of what's holding it back. And over at Elastos, we've got a really interesting protocol called CREDA, which is introducing the concept of credit scores, on-chain credit scores, combines on-chain and off-chain data to give you a universal credit score. And what do you need for traditional credit-based lending? You need a credit score, right? From Experian, FICO, et cetera. So it's all about the tooling. I think there's more tooling along with regulation. The adoption will happen. It's inevitable. It's just how quickly and when is the case.
Interesting. But yeah, just got one last question before we move to the next session. In each of your industry, what innovations can we as the audience expect to see in the coming years? I'll start with you, Basab.
Yes, so we cannot ignore the power of Web3, which is coming. In the next decade, we definitely, slowly, we can see the more adaptations of the metaverse, more adaptations of virtual presence. I know one of my friend, he's not a young guy, so he's 45 plus and then an age, and he invested and bought a small, I think an apartment in Florida by $50,000 in a virtual. $50,000 he paid real to buy a virtual floor, room close to seeing this, all those beautiful sea beach. So he says that, when I come back to the home, I'm building it up. I go to that. I will have a beer in virtually and using my gear maybe, and I will enjoy. So it thinks, a guy is 45 plus years, if he's think about the next generation who are into the gaming, right? So the big way I think the technology is changing. So adaptations for 2 to 3 are going to come, and all financial institutions or different industries are going to then adopt that. Like exchange like us, we already offering staking services. So where you can stake your coins and are interested on that. So the new way you are looking into the financial stuff. Right. We have created a OTC platform in our exchange. Like for example, if you want to have a large amount of Bitcoin you want to transact, let's say 20 Bitcoin, 100 Bitcoin, which is larger than a value, you cannot go to an exchange. We created a platform, we call it an RFQ, and where it goes to the larger liquidity provider, and then you can exchange your currencies. So financial institutions are definitely, this is one instrument for fund transactions, and as our friend told, how quickly we can do the transfer of the fund and bypassing all the banking channel, which is not only the slow but so expensive. Right. So this is an economical way to do that. The first is way to do that, and the most secure, because we know where the fund is going to one location to other location. We have complete address details. We know who is the guy is the sending, who is the guy who is receiving it. Right. The only problem is coming the regulation. Sorry, I'm coming possibly the regulatory part, but that is the only missing element what we believe. Once that has been fixed, which we have already seen that The government framework is coming in slowly, and people understand the criticality of that and adopting it. So I believe it's a big future of the digital asset and the crypto and the metaverse and Web 3.0.
Awesome. All right. Hey, please go ahead, Fakhul.
I think for me, I try to look at, I'm a little bit older. So what is the next generation doing, or those younger? And I think, content creation, social media, anything around that.
Or the creator economy.
The creator economy,
all right.
and I know we've covered it a few times during today, is what will trigger mass adoption. And what are the things you need for that? One is you need an identity solution. And two is you need a way to create and monetize content. So I'm going to selfishly just plug Elastos and give an example. Yeah. So at Elastos, we have a really cool, it's a self-custodial wallet called Essentials, but it doubles up as a identity solution. So when you download the wallet, it not only creates, Bitcoin, EVM wallet, Elastos chains, wallets within the app itself, but you also get a decentralized identity. Now, that's on one side. And then if I look at one of our hero products that's being built on Elastos, it's called Elacity. And they're doing something really interesting where they are using the power of AI art. So what a user can do is they can connect to the platform, they can borrow GPU time, generate art, and then immediately mint that into an NFT and list it for sale. Nice. Or lift it, or they could even list it to, you can rent it. Imagine this is a video. And so they've built DRM technology, digital rights management, so they can earn royalties on that. And the great thing about that is, and people sometimes get worried about marketplaces, either they're centralized or they're decentralized, and you need to worry about the content on them. So what Elacity has done is they've integrated identity. And why is that useful? It's useful because now you can suddenly offer age-restricted content, because the user can demonstrate their age. So now they can, they can access adult material or be gate-kept away from adult material. Right, so that, that creator economy is really important. And I actually think it's those sorts of real-life industries is what's going to kick on and really make crypto become adopted.
Oh, that's awesome. Hey, Zach, you're the last word. Sure. Please share the innovation that we can expect to see in the crypto payments side.
Yeah, I will give a more general answer.
Sure.
It's kind of like the textbook answer that actually I learned from business school, from GSP. Actually, where does the innovation come from? Innovation comes from diversity. So basically, there is actually enough really like a diversity. Actually, there is a chance of being full. There is also a chance of being genius. But there must be actually enough use case and different trial, so actually it can really give the so-called the innovation. So there is like player like us, like fintech. There is a player like bank, and this is only the private sector. There is also the private sector, like the government regulators. They are also trying to actually test the different like a regime in different countries or even in different states here. So that's where actually everyone I think is really doing the innovation, and that's where also I think in the whole financial industry what they are really encourage is so-called the financial inclusion, is that you need to see enough users, enough use case, then actually we can really see what's really the best solution to really provide. It's not like we build a product and looking for the problem. It's always actually we try to actually find where is actually the pinpoint, where is the problem, then we find what's the best solution from the Web3 or can be also from Web2 and then solve the problem.
If you don't mind, a great example of that with DeFi is unbanked individuals. Almost 2 billion individuals, adults worldwide, don't have access to a bank account.
Sure.
Now with DeFi, all you need is a phone and an internet connection, and you can suddenly participate in finance. They're the sorts of things that will, game changers.
Exactly. There are many countries where a lot of challenges, so there are not proper money as well and exchange money, especially on the African countries. We have seen that many challenges, and then inter-country transfer of fund. Now this could be a classic example of the digital currencies which can solve those type of problem.
Oh, that's awesome. No, but hey guys, thank you for taking the time. Thank you for sharing an insight into the crypto exchange and the crypto payments industry. So yeah, I also want to thank the folks at Alibaba Cloud for giving us a space. So yeah, thank you, gentlemen.
Thank you.
Thank you.
Yeah, thank you guys.
Thank you.
Thank you guys.